Hello viewers, welcome to my channel. I'm Hasham. Now I'm going to start the problems on accounting for price level changes. Last video I have explained you the theory regarding accounting for price level changes or inflation accounting. So I explained you what are the limitations of historical accounting and what are the different methods of restating the financial statements according to CPP method and CCA method. The two methods I have explained you regarding the incorporation of price accounting for price level changes. So now I'm going to start the problems. If you have not watched the last theory video, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting. In that Advanced Corporate Accounting, select the video of accounting for price level changes. You will get the theory video. After watching the theory, if you watch the problems, definitely you can be able to understand what is this topic about. So apart from this, I have uploaded many subjects videos in my playlist like financial accounting, cost accounting, corporate accounting, advanced corporate accounting, managerial accounting, and income tax, business statistics, financial management, investment management. So many videos I have uploaded. Select your particular subject, select the video, watch the video till the end. Definitely you can gain a lot of knowledge from these videos. So now I'm going to start the problems. First of all, the total chapter I have divided into two parts, problems on CPP and problems on CCA. 25 problems I am going to solve on CPP method and 15 problems on CCA method. First of all, I am beginning with the problems on CPP method. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So go to the description, last line you will find the link, take a printout and keep it ready before watching the problems. First problem, machinery was purchased on 1st January 2000 for rupees 30,000. When the retail price index stood at 150. When the machine was purchased, at that time, date of purchase 1st January 2000, index number 150. Restate the future in current rupees. We restate the value of that machinery in current rupees on 31st December 2000. That means after 1 year. When the retail index stood at 200. The beginning of the year 1st January 2000, the index number was 150. End of the year 31st December 2000, index number was 200. The value of the machinery at the beginning of the year 30,000. We have to find out what would be the value of the machinery at the end of the year by using the index numbers. So according to CPP method, we can restate the value. We can restate the value by using index number. So first of all, conversion factor. The conversion factor consists of index number at the date of conversion divided by index number at the time the transaction arose. Already in theory video I have explained this. Now how the solution would be like this. Problems on CPP method. Cost of machinery on 1st January 2000, beginning of the year 30,000. Index number on 1st January 2000, 150 given in the problem. And index number on 31st December 2000, end of the year, that is 200. Now we want converted figure and a converted value of machinery on 31st December 2000 or CPP value. Converted value or CPP value means same on 31st December is equal to existing figure of machinery on 1st January into index number at the time of restatement, that is 31st December. End of the year, what is the index number? That is 200. Divided by index number at the date of existing figure. The existing figure 30,000 is given on 1st January. On 1st January, what is the index number? 150. The correction factor will be 200 by 150. The restated value will be 30,000 into 200 divided by 150. It comes to 40,000. So according to historical method, the value of the machinery on 1st January is 30,000. And according to CPP method, the same machinery, the value of the machinery at the end of the year, according to CPP method, is 40,000. How? Existing figure into index number at the end of the year divided by index number at the beginning of the year. End of the year 200, beginning of the year 150. So 200 by 150. Got it. First problem completed. Therefore, converted figure of machinery on 31st December 2000 or CPP value of machinery on 31st December 2000 is 40,000. That's it. Now, second problem. A company purchased a machinery on 1st January 1995 for a sum of rupees 60,000. The retail price index on that date stood at 150. You are required to restate the value of the machinery according to CPP method on 31st December 2000 when the price index stood at 300. Exactly similar. End of the year 31st December 2000. Actually, it is 31st December 2000, end of the period. So end of the period, the index number was 200. At the time when the machine was purchased, its index was 150. So correction factor will be 200 by 150. Correction factor 200 by 150 into what is the existing value of machinery? 60,000. So 60,000 into 200 by 150, you will get the CPP value, restated value. Then calculate the profit or loss on sale if the machinery is sold on 31st December 2000 for 75,000. Now imagine the machine is sold on 31st December 2000 for rupees 75,000. What is the loss or gain according to CPP method? We have to find out. First of all, we find what is the value of the machinery according to CPP method. So converted value of machinery on 31st December 2000, end of the year. Value of machinery on 1st January 2000, that is 60,000, into index number on 31st December 2000. 31st December 2000 divided by index number on 1st January 2000. Actually, it is not 1st January, it is 1st January 1995. 1st January 1995. So 1st January 1995 it is 150 and 31st December 2000 it is 2000. This is the correction factor. So 60,000 into 200 by 150, 80,000. CPP value at the end of the year 31st December 2000 is 80,000. What is the sale price? 75,000. So actually 80,000 rupees is the value of the machinery, but we have sold it for rupees 75,000. There is a loss of 5,000. Loss of 5,000. So sale value of machinery is 75,000. Less minus CPP value of machinery on the date of sale is 80,000. So 75,000 minus 80,000, you will get minus 5,000. Minus 5,000 means loss on the sale of machinery. That's it. Next, third problem. A company bought investments at a cost of rupees 6 lakh on 1st July 2000 when the price index stood at 300. So 1st July 2000 investments were purchased for rupees 6 lakh and the index at that time 300. On 31st March 2001, the index moved to 320 and the market value of the investment has come down to 6,10,000. Market value of investment is 6,10,000. So we will find out what is the CPP value on 31st March 2001. Then what is the loss or profit on investment? So we compare what is the CPP value and what is the market value. If the market value is less, then there is a loss. If the market value is more, there is a profit. So first of all, we find out what is the CPP value of this investment. CPP value on 31st March 2000. What is the original cost according to historical cost basis? 6 lakh into 320 by 300. 320 is the index number on 31st March 2001 and 300 is the index number on 1st July 2000 when investment were bought. So 6 lakh into 320 by 300, it comes to 6,40,000. This is the CPP value. And what is the market value of investment on 31st March 2001? 6,10,000. So actually CPP value is 6,40,000. But the market value has come down to 6,10,000. If this business has sold this, they will get 6,10,000. Whereas the CPP value is 6,40,000. There is a loss. There is a loss of rupees 30,000. 640 minus 610, 30,000. Therefore, loss on the value of investment as per CPP method, 6,40,000 minus 6,10,000. 30,000 rupees loss. Next, fourth problem. From the following information, restate the amount of sales in terms of 1995 indices. So sales are given 1993, 94, 95. 3 years sales are given. The actual sales, unadjusted sales or historical sales are 10 lakh, 12 lakh, 13 lakh, 80,000. So you can see every year sales are increasing. 93 sales 10 lakh, 94 12 lakh, 95 13 lakh 80,000. Index number, average price index in 1993 is 80, 94 100, 95 120. Now the price index at the end of 1995 is 130. Comment on the trend in sales. So we have to restate, we have to convert the sales in terms of 1995 index. We have to convert all the sales of 93, 94, 95 in terms of index of 1995, right? So you see, the calculating the sales value as per CPP method, we are converting the historical sales into CPP sales. So 93, 94, 95 sales value unadjusted. Unadjusted means historical. Historical sales 10 lakh, 12 lakh, 13 lakh, 80,000. Now conversion, average price index. The average price index for 1993 is 80, 94 100, 95 120. These are the index number given for 93, 94, 95. Right? Now conversion factor. Conversion factor means index number at the end of 1995 divided by index number of the year of sale. At the end of 1995, what is the index? 130. Index number is 130. So numerator will take 130. Denominator, what is the index in 1993? 80. So 130 by 80, 1.625. This is called conversion factor. For 94, 130 divided by 100, 1.3. For 1995, 130 divided by 120. 120 is the average index of 1995. And the end of 1995 index number is 130. So 130 by 120, 1.083. Now we want to restate the sales according to CPP method. Restate the sales according to CPP method. So we multiply the historical sales into conversion factor. How much is the historical sales? 10 lakh. Conversion factor 1.625. So 10 lakh into 1.625, 16 lakh 25,000 is the CPP sales, restated sales. Similarly, 12 lakh into 1.30, it comes to 15 lakh 60,000. These are the restated sales. Then 13 lakh 80,000 into 1.083, 14 lakh 95,000. So we have converted the historical sales into CPP sales by using correction factor. Correction factor is index number of the end of 1995 divided by index number of 93, 94 and 95. That's all. Now it is asking you to give the comment on this trend of sales. Comment on this trend of sales. So in unadjusted sales, historical sales, you can see sales are increasing. 10 lakh, 12 lakh, 13 lakh 80,000. So if you closely observe the sales, it is increasing in absolute terms in historical method. But according to CPP value, the sales are declining. 16 lakh 25,000 in 93. It has come down to 15 lakh 60,000 in 94 and 14 lakh 95,000 in 1995. The sales are decreasing. This is the observation. So here, although the sales are increasing as per historical cost accounting, the sales are actually declining as per CPP method. That's it. Now come to problem number 5. Ascertain the net monetary result. Net monetary result means net monetary gain or loss. In the theory video, I explained you that during the time of inflation, holding monetary assets will incur loss, and holding monetary liability will get the gain. The liabilities will get the gain. Assets will incur loss at the time of inflation. So we have to find out what is the net monetary result by holding monetary assets and monetary liabilities. So as on 31st March 2010, from the data given below, 1/4/2009 beginning of the year, 31st March 2010 end of the year. The beginning of the year, end of the year, data is given cash at bank, account receivable, accounts payable. Remember, cash is a current asset, account receivable is a current asset, monetary assets. Cash and account receivable are monetary assets and account payable is a monetary liability. So having accounts payable will get the gain. Having cash and account receivable, we may incur loss, monetary loss, right? Then general price index numbers are given on 1/4/2009. Beginning of the year index number was 100. And 31st March 2010, end of the year index is 125. And 2009-2010 average is 120. The average index is 120. This is the information given. Now see carefully, very important problem this one. Computation of monetary gain or loss. So I have opened the column particulars column, historical value, which is given in the problem. And correction factor, conversion factor or correction factor, you can call it anything, right? Then adjusted value. Adjusted value is the CPP value. CPP value. Now first of all, cash. The opening cash on 1st April 2009 is 15,000. The opening cash 15,000. Now correction factor. End of the year 31st March 2010. What is the index number? 125. At the end of the year 31st March 2010, the index number is 125. So numerator 125. Denominator, the index number on 1/4/2009, beginning of the year. Beginning of the year index number was 100. Beginning of the year 100, end of the year 125. So 125 by 100 is the correction factor because this is the opening balance. Opening balance means 1/4/2009. That's why the correction factor 125 by 100. So 15,000 into 125 by 100, you'll get 18,750. CPP value of opening stock. So historical value of opening stock 15,000. CPP value of opening stock 18,750. Now increase during the year. See here, cash balance beginning of the year was 15,000. End of the year cash balance was 21,000. From 15,000 to 21,000, how much is increased during the year? 21,000 minus 15,000, 6,000 rupees increased. So increase during the year 6,000 rupees as per historical method. Now we have to convert it into CPP. Now this increase during the year. During the year means we'll take the average index. We'll take the average index. The average index is 120. So 125 divided by 120. Numerator index will take end of the year. End of the year index is 125. And denominator index is average. Opening stock we have taken 100. Increase during the year we are taking 120 because increases during the year. So 6,000 into 125 by 120 will get 6,250. That's all. Now take the total. 15,000 plus 6,000, 21,000 is the closing balance of cash. Closing balance of cash according to historical method. Right? According to CPP method, 18,750 plus 6,250, 25,000. Now see here. 25,000 is the closing cash balance as per CPP method. As per historical method, we are having 21,000. 21,000. So net loss on holding cash is 25,000 minus 21,000, 4,000. We are getting 4,000 rupees monetary loss. 4,000 rupees monetary loss on holding cash. On holding cash. Now account receivable, second asset. Account receivable opening balance 45,000 given in the problem. On 1/4/2009 opening balance is 45,000. So 45,000 into 125 by 100, correction factor. End of the year index 125, beginning of the year index 100. So 45,000 into 125 by 100, 56,250 is the CPP value of opening account receivable. End of the year account receivable is 54,000. Beginning of the year 45, end of the year 54,000. So how much increased during the year? 9,000. 54,000 minus 45,000, 9,000 increased. So add increase during the year 9,000. Now convert it into CPP value. So we'll multiply 125 by 120. 120 is the average index during the year. It is given in the problem. During the year average index 120. So 125 by 120. 9,000 into 125 by 120, 9,375. Now you add up. 45 plus 9, 54,000 is the historical value of account receivable at the end of the year, closing. Similarly, CPP value of account receivable is 65,625. Now, what is the monetary loss on holding account receivable? 65,625 minus 54,000. You will get the monetary loss on holding account receivable. So, there will be monetary loss on holding current assets. Cash is a current asset, monetary asset, and account receivable is a monetary asset. So, on holding monetary asset will incur loss. Now, account payable. Account payable is a monetary liability. On holding monetary liability, we'll get gain. We'll get the gain. So, opening balance. What is the accounts payable opening balance? 75,000. 75,000 accounts opening balance. Historical value. Now we multiply conversion factor. 125 by 100 because opening. So, 75,000 into 125 by 100, 93,750 is the CPP value of opening. Now, minus decrease during the year. Here it is not increase, decrease. See here. Accounts payable beginning of the year 75,000. Beginning of the year accounts payable 75,000. End of the year is 50,000. Beginning of the year 75,000. End of the year 50,000. So there is a decrease in accounts payable. That's why I'm writing minus. Decrease during the year 25,000. The bracket denotes minus. Brackets means minus. Now we multiply correction factor 125 by 120 because this is during the year. So we take average. So 25,000 into 125 by 120, 26,042. Now deduct. 75 minus 25, 50,000 rupees is the closing accounts payable. Similarly, 93,750 minus 26,042, 67,708 is the CPP value of accounts payable at the end of the year. That's it. The calculations part over. Ultimately, it is asking you to find out the net monetary result. Net monetary result means we have to set off the monetary gain and monetary loss. The monetary loss will be there on cash and account receivable. Monetary gain will be there in accounts payable. Now here we calculate net result. Monetary loss on holding cash. On holding cash, how much monetary loss? 25,000 minus 21,000 is 4,000. So 4,000 rupees monetary loss on holding cash. Similarly, monetary loss on holding account receivable. Account receivable 65,625 minus 54,000. You will get 11,625. 65,625 minus 54,000. 11,625 is the monetary loss on holding account receivable. Now take the total loss. 4,000 plus 11,625, 15,625 is the total monetary loss on holding monetary assets. On holding monetary assets. Now we'll find out how much is the monetary gain on holding accounts payable. Minus monetary gain on holding holding creditors or accounts payable. Creditors or accounts payable means same. So 67,708 minus 50,000. So 70,708 is the monetary gain. The monetary loss 15,625 and monetary gain 17,708. If we set off, we are having net gain because gain is more. Loss is less. Gain is more. So 17,708 minus 15,625, 22,083. 2083 is the net monetary gain. Net monetary gain on holding monetary assets and monetary liabilities. So this is the end of problem number 5. Come on, see the 6th problem. Explain and ascertain net monetary result at 2000 end from the undermentioned data. So we have to find out net monetary result means monetary gain or monetary loss. By holding monetary assets, we will incur loss. By holding monetary liability, we get the gain. Already I told you in the previous problem also. Here 2000 start, 2000 end. Beginning of the year 2000, end of the year 2000. Bank, account receivable, accounts payable. The bank and account receivable are assets and account payable is a liability. So we are going to get the gain on accounts payable. and we are incurring monetary loss on holding bank balance and account receivable. Starting, so here index numbers are given. 2000 start, index number 100, 2000 end, index number 200, and average index of 2000 is 160. The beginning of the year index number 100, end of the year index number 200, and average during the year 160. The numerator we will take the index number 200. For correction factor, numerator index number 200. If it is opening balance, we take denominator 100. If it is during the year, we take denominator index as 160. That's it. Now see here. Computation of monetary gain or loss. Historical value, correction factor, adjusted value. Exactly same what we have done in the previous problem. The particulars, bank balance. Opening bank balance is given 2000. So I have taken 2000. Now correction factor will be end of the year index number is 200 and beginning of the year index number is 100. So 200 by 100. So 2000 into 200 by 100 you will get 4000. This is the CPP value. CPP value of opening bank balance. Now during the year how much increased? So compare it. Beginning of the year bank balance 2000, end of the year bank balance 3000 given in the problem. Beginning of the year 2000, end of the year 3000. So 1000 rupees bank balance increased during the year. So increased during the year 1000. This is during the year, so denominator index will take 160. 160 is the average index. So average index is 160. So 1000 into 200 by 160, 1250. 1250. Take the total, 2000 plus 1000, 3000 is the historical closing balance of bank. CPP value of bank balance is 5250. 4000 plus 1250. Right? So how much is the loss on holding bank balance? 5250 minus 3000. 2250 you can see here. Monetary loss on holding bank balance. 5250 minus 3000. 2250. One item over. Now account receivable is another asset. The opening balance of account receivable is given 10,000. So 10,000 into 200 by 100, 20,000. Opening balance, that's why 200 by 100. Now during the year how much increased? 10,000 to 12,000. So 2,000 rupees increased during the year. 2,000 into 200 by 160, 2,500. So closing balance 12,000, 22,500. This is the closing balance, historical value of account receivable end of the year 12,000, and CPP value of account receivable end of the year 22,500. So how much loss we are incurring by holding account receivable? 22,500 minus 12,000. You can see here monetary loss on holding account receivable 22,500 minus 12,000 is 10,500. This is the loss on holding account receivable. Now accounts payable, there is a gain. The opening balance of accounts payable 15,000 given in the problem. So 15,000 into 200 by 100, 30,000. Now during the year increase or decrease, see the problem. Beginning of the year 15,000, end of the year 10,000. So there is decrease in accounts payable. So minus decrease in accounts payable 5,000. Bracket denotes minus. Subtract. So 5,000 into 200 by 160, 6,250. Deduct 15,000 minus 5,000, 10,000. Closing balance of accounts payable according to historical basis. According to CPP value, 30,000 minus 6,250, 23,750. That's all. Now, total monetary loss. So 2,250 plus 10,500, 12,750 is the monetary loss on holding bank balance and account receivable. On holding accounts payable, there's a monetary gain. So 23,750 minus 10,000, 13,750. 13,750 is the monetary gain and 12,750 is the monetary loss. So which is more? Gain is more or loss is more? Gain is more. So net monetary gain 13,750 minus 12,750, 1,000 rupees. That's all. This is the ultimate monetary result at the end of 2000. Now seventh problem. See the seventh one. Exactly again similar. Compute the net monetary result of X company as on 31st December 2000, end of the year. The relevant data are given below. Cash, book debts, creditors and loan. 4 items are given. Cash and book debts. Book debts means account receivable. Debtors. Debtors, account receivable or book debts means same. These are the assets. Cash and book debts are assets. Loan and creditors are liabilities. So the business will gain by holding liabilities, creditors and bank loan. The business will incur loss on holding monetary assets, cash and book debts. Opening 1st January 2000, 31st December 2000. Retail price index numbers are on 1st January 200, 31st December 2000 is 300 and average for the year 240. So for opening balances we take 300 by 200. For during the year we take the correction factor 300 by 240 as usual. Come on. Computation of net monetary gain or loss. Particulars. Historical value, correction factor, CPP value. Cash opening balance is 5,000 given in the problem. 5,000. 300 by 200. End of the year index 300. Beginning of the year index 200. So 5,000 into 300 by 200, 7,500. During the year increased. Cash balance beginning of the year 5,000. End of the year 10,000. So 5,000 rupees increased during the year. So 5,000 into 300 by 240. During the year, we will take the index average 240. So 5,000 into 300 by 240, 6,250. So closing add up 10,000 historical value and 13,750 is the CPP value, right? So this will be called, this will be taken as monetary loss. So monetary loss on holding current assets. Current assets are cash and book debts. So on cash, how much is the loss? 13,750 minus 10,000. 3,750 is the monetary loss on holding cash. Next, book debts. Opening book debts are given in the problem 20,000. 20,000. So 20,000 into 300 by 200, 30,000. Similarly, during the year, increased during the year. Book debts beginning of the year 20,000, end of the year 25,000. So 5,000 rupees book debts increased during the year. Increased during the year 5,000. Into 300 by 240, 6,250. Add up closing 25,000 or 36,750. So how much is the loss on holding book debts? 36,250 minus 25,000. We'll get 11,250. So total monetary loss is 15,000 on holding cash and book debts. Now liabilities, creditors. Opening creditors are given in the problem as 15,000. 15,000 into 300 by 200, 22,750. Now increase during the year. Creditors beginning of the year 15,000, end of the year 20,000. The 5,000 creditors increased 5,000 into 300 by 240, 6,250. The total closing balance of creditors 20,000 historical value and CPP value 28,750. So how much is the gain on holding creditors? So here monetary gain on holding current liabilities. Current liabilities are creditors. So how much is the gain? 28,750 minus 20,000. 8,750 is the gain on holding creditors. Now loan. Opening balance of loan 20,000. So loan opening balance 20,000. 300 by 200, 30,000. End of the year loan is 20,000. Beginning of the year 20,000, end of the year 20,000. Neither increased nor decreased. No increase or decrease during the year. So closing balance 20,000, closing balance 30,000. So how much is the increase? 10,000. Loan 30,000 minus 20,000, 10,000. So total monetary gain is 18,750. Monetary gain 18,750. Monetary loss 15,000. So net monetary gain 18,750 minus 15,000, 3,750 is the monetary gain on holding current liabilities and current assets. That's it. This is the 7th problem. Now 8th problem. Explain and ascertain net monetary result at the end of the year from the following data. Bank balance is given, account receivable, accounts payable, stock and fixed assets. Now see here. Monetary assets are those items whose amounts are fixed by agreement. Whose amounts are fixed by agreement. So here bank balance, account receivable, accounts payable. These three are monetary items. Whereas fixed assets and stock are non-monetary items. So we will not consider the value of assets, stock and fixed assets while calculating net monetary gain or net monetary loss. So we should not consider stock and debtors. That is a new point. General price index opening 100, closing 200, average 160. So what is the new point in this problem? The new point is we are given stock and fixed assets. These two items are considered non-monetary. It is called non-monetary items. So these non-monetary items should not be considered. So here I have written, as stock and fixed assets are non-monetary assets, these are not considered for computing monetary gain or monetary loss. Only three items we consider, that is bank balance, account receivable and accounts payable. As usual, in the problem given bank balance opening 22,000. Now multiply by correction factor 200 by 100. 200 is the closing index and 100 is the opening index. So 4,000. Increase during the year. The beginning of the year 2,000, end of the year 3,000. So 1,000 is increased. So 1,000 into 200 divided by 160. 160 is the average index because during the year. So 1,250. The closing balance 3,000 historical, 5,250 CPP. So how much is the loss? 5,250 minus 3,000, 2,250 is the loss on holding bank balance. So bank balance, monetary loss on holding assets. Bank balance 2,250. Now come to accounts receivable. That is also a current asset. The opening balance is 10,000. Opening balance 10,000. 10,000 into 200 by 100, 20,000 is the CPP value. During the year increased is 2,000 because in the problem end of the year 12,000 given. So 2,000 increased during the year. So 2,000 into 200 by 160, 2,500. Add up 12,000, 2,200. So how much is the loss? Loss on holding account receivable 2,200 minus 12,000, 10,500 is the loss. The total monetary loss is 12,750. Add up both. Total monetary loss on holding bank balance and account receivable. Now account payable is a liability. So we'll get monetary gain. So opening balance is 15,000 into 200 by 100, 30,000. Now during the year there is decrease because in the problem it is given opening 15,000, closing 10,000. In the problem given opening 15,000, closing 10,000. So 5,000 decrease during the year. So minus decrease during the year 5,000. So 5,000 into 200 by 160, 6,250 decrease minus bracket. So deduct 15 minus 5, 10,000, 30,000 minus 6,250, 23,750. So how much is the monetary gain on holding accounts payable? 23,750 minus 10,000, 13,750. 13,750 is the monetary gain on holding account payable. And 12,750 is the loss on holding monetary assets. So net gain. Net gain is 13,750 minus 12,750. 1,000 rupees is the net monetary gain on holding current monetary items. That's it. So totally 8 problems I have completed in this video. 8 problems on CPP method. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and increase their knowledge. And give your comments on these videos. Lastly, don't forget to subscribe my channel. We'll continue the next problem in the next video.